Do you know that just 10% of traders who invest in prop firm trading challenges successfully pass Phase 1? Out of these 10%, just 24% manage to overcome the hurdles of Phase 2. This is according to stats released by MyForex Fund, a popular forex prop firm. But wait, there's more. Of those that manage to cross the Phase 2 hurdle, an astonishingly low 3% of these traders reach their first profit split. Let's bring this into context and show how ridiculous these stats are. Imagine a scenario where 10,000 traders purchased an account with the prop firm and embarked on the challenge. According to their stats, out of the 10,000 traders who purchased an account, 1,000 successfully passed Phase 1. Just 240 traders from the 1,000 proved their mettle and advanced through the less demanding Phase 2. And of the 240 traders that got funded, only 8 of them reached their first profit split. I guess you are wondering why only a few succeed at making a profit with prop firms. Well, the company also gave some insight into why this is the case. It was revealed that over 60% of traders in their database do not use a stop loss, and thus have a high risk of ruin. When the market is more volatile, more traders fail because of a lack of risk management discipline. And when this volatility is prolonged, it's a bloodbath of epic proportions. Traders who hold trades over the weekend have a 60% chance of failing or losing their accounts. All the traders who received record payouts lost their accounts within 3 weeks of the payout due to taking excessive risks, which they didn't need to take. At this point in the video, I know you want to ascertain with every fiber in your body that the idea of prop firms is a scam. But before you do that, listen to this first. The company also shared insights into the habits and trading patterns of the very few successful traders on their platform. Traders who have made it to their 4th pay cycle all have a risk management strategy of below 3% risk on any given day. When this data was published, 5 traders were on their 8th payout on evaluation live accounts, and they all traded conservatively to ensure they got paid. None of these successful traders risked more than 2% per trading day, and they stopped when they reached 4 to 8% in profit until the pay cycle has ended. Lastly, the profitable traders are in the market less than 4 hours per day. If you're thinking about it, yes, you are correct. The successful prop firm traders do things differently. Now, ask yourself, will I ever pass a prop firm challenge? Will I ever be a successful trader on these platforms? If your answer is a resounding yes, then congratulations. But if it's not, I also say congratulations, because this video is made specifically for you, and it could be the change you've been looking for to become a successful trader, and maybe a funded one too. What you should know first and foremost is that the prop firm's challenges are designed so you can fail them. Yes, that's the real prop firm money-making model. But as the stats suggested, traders who are in the right mental state and truly know their edge still get funded and consistently make a profit every month. In this video, we go over 5 factors that are the main contributors to why traders fail prop firm challenge, how you can pass and make consistent profits from them. Number 1. Emotions and psychological factors. Emotions like fear and greed can significantly impact trading decisions. Most beginner traders do not know the role emotions and trading psychology play in their overall success. But the prop firms know this and are taking advantage of it. The drawdown rules, time limits, and the minimum trading days requirements are there so you would make mistakes, lose trades, and lose your head. Traders who fail to control their emotions may engage in impulsive or irrational behavior, deviating from their trading plan, and start making poor decisions based on short-term market movements. I made a video that talked about 5 practical tips that will help you improve your trading psychology. I will leave a link in the description. Number 2. Adaptability. A trading mentor once told me the story of a very successful trader named Gerald, who found success using a particular trading indicator he had mastered. He reveled in his accomplishments, riding the waves of consistent profits. Market landscape evolved, new trends emerged, and unforeseen events impacted movement of the asset he was trading at the time. As the market began to shift, Gerald stubbornly clung to his outdated strategy. Convinced that his tried and true methods would continue to work, he refused to acknowledge the changing dynamics. Unfortunately, this resistance to adaptability led to missed opportunities and mounting losses. The moral of this story is that the financial markets are dynamic and ever-changing. As a trader or one hoping to get funded, you need to be adaptable. Traders who fail to adapt to shifting market conditions fail to adjust their strategies accordingly. They fail to recognize when their approach is no longer effective, and they struggle to achieve consistent profitability, especially as a prop firm trader. Number 3. Capital management. It's essential to recognize that some rules and requirements are put in place to ensure risk management and long-term success. One aspect is the drawdown rule, which is commonly set between 8 to 10% across various online prop firms. This rule serves as a risk control measure to prevent excessive losses and protect both the trader and the firm's capital. It encourages traders to manage their risk appropriately and avoid overexposing themselves to potential drawdowns. The stats from the popular prop firm claim that over 60% of traders in their database do not use a stop-loss. This is a concerning trend, as stop-losses are vital risk management tools that help limit losses and protect capital. Traders who neglect to utilize stop-losses are at a higher risk of suffering significant drawdowns and facing adverse consequences. Proper capital or risk management is indeed crucial for long-term success in trading. While it is essential to be mindful of the challenges and rules set by prop firms, it's equally important for traders to take responsibility for their risk management practices. Building a solid risk management plan is a key factor in achieving sustainable success in the trading industry. Number 4. Discipline and patience. A friend once made a claim that prop firms intentionally set time limits on their challenges to increase the likelihood of failure, and that even if it's true that some traders manage to secure funding within the given time frame, oftentimes this is a function of luck rather than exceptional trading skills. While it is true that patience is indeed closely tied to the concept of time, and that successful traders understand the importance of patience and waiting for the right trading setups, it must be said that they don't act impulsively or succumb to the pressure of time constraints either. These skilled traders recognize that a significant portion of their time is spent observing the market rather than constantly opening positions. It's important to note that prop firms may have time limits in place to assess traders' abilities to handle pressure and make sound decisions within a specific time frame. While this can be seen as a challenge, it also simulates real-world trading scenarios where traders need to act efficiently and effectively. Ultimately, the intention behind time limits set by prop firms may vary, but traders must develop discipline, patience, and strategic thinking to navigate the challenges presented within these constraints. If you lack discipline and patience, you may deviate from your trading plans, chase trades impulsively, prematurely close winning positions, or jumping into trades without waiting for proper setups, or fail to adhere to risk management rules. An alternative approach to prop firms' time limitations challenge is to consider purchasing accounts from companies that offer no specific time limit. One of such prop firms is Funded Next. This is the prop firm I personally use. They have no time limits, and this affords me the opportunity of being disciplined and also having the patience to wait for my trading setups. If you're thinking of opening a prop firm account and you want one that will afford you the time to take the right setup, then I would recommend Funded Next. There's a link in the description of this video that will take you to their platform. If you register through that link, I get paid a commission. A quick disclaimer before we continue. I'm not claiming that Funded Next is the best prop firm out there, or that it's the only one without time limits, or that if you open an account with them, you're guaranteed to make money. Also, I'm not saying you must buy a challenge account from them or through my link. No, far from that. I'm saying it's the one I use and I have a good experience with them. By all means, do your own research and own your decisions. Now that we got that out of the way, Let's get back to the last factor that will help you pass prop firm challenges and make money with them in the long run. Number 5. Ability to handle pressure. Volatility can create challenging and unpredictable market conditions that require traders to make quick and informed decisions. If volatility persists over an extended period, it can indeed lead to significant losses for traders who are not equipped to handle the pressure and adapt their strategies accordingly. This is what is referred to as a bloodbath of epic proportions in the data provided, describing a situation where market volatility causes widespread and severe financial losses. Handling the pressure that comes with trading is a crucial skill many traders struggle with. The ability to remain calm, make rational decisions, and stick to a well-defined risk management plan is essential. Trading can be a high-pressure environment, particularly when trading prop firms' funds. It's important to note that while these challenges can contribute to failure, they are not insurmountable. Traders who are aware of these potential pitfalls can work on developing their skills, knowledge, emotional control, and discipline to increase their chances of success in a prop trading environment. To sum up, I would like to mention that I am currently a funded trader. I have successfully completed 3 funded challenges, but it's important to note that I faced failures before reaching this stage. However, I have gained valuable insights from those failures and learned from my mistakes. The video emphasized the factors that I found particularly noticeable and challenging throughout my journey. I would encourage you to watch the video up here on trading psychology, which will certainly help fortify your mindset and set you on the path to being fully funded. If you made it to the end of this video, I congratulate you. And if you found this video helpful at all, please destroy that like button, subscribe to the channel, and turn on the notification bell so you don't miss it when I drop videos like this in the future. Thanks for watching.